Bắt đầu.
Good morning, class. Nice to meet you all in this semester after a very long holiday. And today we will study financial accounting. And remember that check your attendance first, and we can start our class today. Let me check your attendance. I have an iPad here, and I will follow you. Remember that answer all my questions during the class. Are you ready? Before starting, I will give you some basic information about the subject with some criteria for evaluation. Internal tests and grades. The evaluation cover chapters as follows. We have class participation account for 10%, and remember that answers all my questions during the class to get the point of 10%. We have homework and attendance is account for 5%. We have two quiz. The first quiz it will cover chapter 1, 2, and 3 and account for 15%. For midterm test, it will cover from chapter 1 to chapter 6 and it will account for 25%. For the quiz 2, it account for only chapter 7, 8, and 9 and it will account for 15%. For the last one, final exam, it will cover from chapter 7 to chapter 11 and account for 30%. Yeah, even though you see the final test will just cover from chapter 7 to chapter 11, but in order to do the exercise from chapter 7 to chapter 11, so you have to understand everything before, especially from chapter 1 to chapter 6, give you very basic information that you can complete the final exam with very good result. And remember, the same for every subject you learned before. In order to pass the subject, your total rating needs to be over 5.4 points. Okay, so if any question about the evaluation, if you have that, so please comment. Now move on to the next slide. So the first slide. So I will give you some basic information about accounting. So what is the accounting, the meaning of accounting, and the roles of accounting? Accounting is an information system that identifies, records, and communicates the economic events of an organization to interested user. So the economic event, what are they? What the meaning of economic events? Actually, for every day, the firm have to. There are a lot of events or economic events for the firm, like a lot of transactions, like buying the new assets, buying the new equipment. Equipment might be a computer, might be laptop, or a lot of things. And the economic event might be you paying the salary for employee. And the economic events also related to borrowing money from bank, or you issue some kind of security like bond, like stock. So all the economic events, you have to record all of them. You have to record, and then you report it to the user of financial information. So who are the users of the financial information? They might be the managers, investors, or creditors. So the roles of accounting to record all economic events in the firm. Remember that success in business requires making calculated decisions, and decisions require financial information, of course. The purpose of this chapter is to show you what roles accounting plays in providing financial information. Firstly, I will give you the chapter outline with some learning objectives. We have three main learning objectives in this chapter. The first one, identify the forms of business organization and the use of accounting information. The second one, explain the three principal types of business activity. The last one, describe the four financial statements and how they are prepared. And we will in turn go to each learning objective. For the first one, identify the forms of business organization and the use of accounting information. So firstly, we have the forms of business organization. Actually, we mentioned here with three main types of business organization. And the first one, sole proprietorship. What is that? it's a business owned by one person, just only one person, and it's very simple to establish. Like you can very easy to open your own company, like a flower shop, a souvenir shop, a photocopy shop, for example, like that. It's a kind of sole proprietorship. And it's the owner controls, because you are only the owner of the firm, so we have the owner control for the firm. And for this type of business organization, you have the tax advantages, and but we have disadvantages from this type of business organization, because you're the only one and just a small firm, so it's very difficult for you to finance fund if you want to expand your business. This problem about the signal and light. Now start again with the second type of business organization we call the partnership, and I will give you some characteristics of partnership here. For partnership, they are normally have two or more owners of partnership. This type of business organization is the same like sole proprietorship. It's very easy to establish because we have two or more owners for partnership, so we have the share control with other owners. And because we have number of owners, so we have the advantages from that, because we have broader skills and resources. And we have tax advantages for partnership as well, the same like sole proprietorship. For the last type of business organization here, I give you the type of corporation. For corporation, this is all by stockholders. Stockholders, what does that mean? So mean there are a huge number of owners with the for corporation. Like you invest in the stock of Apple, so you will become the owner of Apple. It depends on the percentage share you are holding. Because very easy for you to invest in stocks to get the rights of owner of the firm. So it's very easy to transfer the ownership as well by selling your stock to others. And for corporation, it's very easy to raise funds. It's different from sole proprietorship and partnership. For corporation, you can raise funds by borrow money from bank. You can issue bond or issue stocks through security market. And there's no personal liability for corporation because we have a number of different owners. Then, so which type of business organization we focus on to study here? You see the combined number, we give you information about three types of business organization here. The combined number of prime proprietorships and partnerships in US is more than five times of the number of corporations. A lot of the majority of firms in US are proprietorship and partnership. However, the revenue produced by corporation is 8 times greater. 8 times greater. So we will focus on corporation to study because this is the target of all types of business. They want to develop to corporate in the future. So we will focus on corporation to study accounting and accounting system, how to record all transactions for corporation. And then it's very easy for you to apply to the type of proprietorship and partnerships. And I will give you some example about corporation. Most of the largest businesses in the world, for example, Coca-Cola, General Motors, Citigroup, and Microsoft are corporations. Next slide, I will give you information about the user of financial information. So who are the user of information? Managers, investors, creditors, and so on. I will give you here. We will divide it into two types of objects here, internal and external. For internal, who measure, who plan, organize, and run a business. And the use of financial information might be marketing managers, production supervisor, finance directors, and company officials. And here, I give you some questions asked by internal user. For finance department, the question might be, is cash sufficient to pay dividend to Microsoft stockholders? For management, the question might be, which PepsiCo's product line is the most profitable? Should any product lines be eliminated? For marketing department, the question might be, what price should Apple charge for an iPhone to maximize the company's net income? And for human resources department, the question might be, can General Motors afford to give its employees pay raises this year? So in order to answer all the questions here, so we need the information related to finance. And then the roles of accounting is to record all the information related to finance, then report into financial statement, and then we can give some information for internal users. Next one, we have the second object who want to know about the financial information of the firm is external users. For external, they might be investors, of course investors who invest in our company, and they expect the interest, they expect that they get the interest, they can share the profits with our company and they invest in stock. So they want to know about the performance of our firm, so they want to know about the financial information. For creditor who lend you money, like bank, of course you want to know about the performance of the firm as well. Then they need financial information. And some other like regulatory agencies, tax authorities, customers, labor unions, and economic planners. Next slide, the question asked by external user. The number of questions might be for creditor, when United Airlines be able to pay debts as they can view the ability to pay debts. And when creditor want to know about our firm. For investor, the question might be, is General Electric earning satisfactory income? And for investor, how does Disney compare in size and profitability with Time Warner? So the same. If we want to answer all the questions, so we need the information about finance of firm. Next slide, I mentioned the ethics, the problem of ethics in financial reporting. Regulator and lawmaker were very concerned that the economy would suffer if investors lost confidence in corporate accounting because of unethical financial reporting. All wrong information, all fake information, fraud information related to finance might cause very dangerous, very bad result. So you can check online, you can search for the recent financial scandal related to Aaron, WorldCom, House South, AIG, and some others. So you can see the results that the wrong information about the firm, about the financial situation of the firm will cause very bad result, and it's called the bad impact to the economy as well. And so we need regulation for effective financial reporting. I will give you some example about unethical financial information. The unethical financial information here might be overstated revenues or expenses. Or they use accounting trick to hide losses and cover up cash shortages. And here are the two examples. A lower level employee was entrusted by the CFO to create invoices, knowing that they could not be sent to the client. That means a kind of fake invoice. The second one, a person intentionally gave the auditor incorrect information in the course of the audit. So remember that all wrong financial information lead to some bad outcome. So we should have ethics in financial reporting when we record all transactions, everyday transactions of firms. I will give you the first example and the first question. Make sure that all of you answer this question. The first one is related to business organization forms. In choosing the organizational form for you for your outdoor guide service, you should consider the pros and cons of each. Identify each of the following organizational characteristics with the organizational forms or forms of which it is associated. That means you identify the type of corporation related to each item here. For the first one, easier to raise funds, is a mention corporation or sole proprietorship or partnership. So could you identify? For the second one, simple to establish, which type that give you this characteristic here, simple to establish. The third one, no personal legal liability and tax advantages. The last one, easy to transfer ownership. So the first one, easier to raise funds. Which type? Please answer and I will follow you. The first one, corporation or sole proprietorship or partnership. Vinh Nguyễn, give me the answer for corporation. Good, very good. Thanh Trần, good. The first one, corporation. The second one, sole proprietorship and partnership. The third one, corporation. How about the fourth and the fifth one, Thanh Trần? Yeah, Thanh Phương Đỗ. First one, corporation. Yeah, keep going. Simple to establish. Very good. I see that almost all of you have the correct answer. Keep going. Good. Thanh finished her answer for all five. Good. Good. Yes, very good. Keep going. Good, keep going. Okay, very good. One more minute. Okay. Now move on to the answer, the solution for this question and check your answer. The first one, corporation, very easy to raise funds by borrowing money from bank, issuing bond or issuing stock. That you can do that for sole proprietorship and partnership. Is it simple to establish for corporation? No, it's very hard to establish because it's very big, the large corporation. So simple to establish, we have it for sole proprietorship and partnership. For number 3, we have no personal legal liability because we have a huge number of owners. So is it the characteristic for corporation? For tax advantages, for corporation, we don't have tax advantages because you have double tax. You have to pay double tax. We will mention later when in the next chapter why they have double tax payment for corporation. So tax advantages just apply for sole proprietorship and partnership. The last one, easier to transfer ownership. Is it for corporation? Okay, the second question, which is not, strictly not, one of the 3 forms of business organization: sole proprietorship, creditorship, partnership, or corporation. Someone gave me the answer of limited liability company, but here I just mentioned 3 main types of business organization. So answer following the 3 types of business organization here. That means it is sole proprietorship or partnership or corporation. Good. B. B. A lot of students got the answer for the example 2. B. Good. Very good. Very good. Quickly. Okay, good. It seems that all of you got the answer already, so let's check. It seems that all of you have the correct answers. Yeah, creditorship, B. We just have 3 forms: sole proprietorship, partnership, and corporation. The next slide, we talk about the principal types of business activity, the second objective of this subject. All businesses are involved in 3 types of activity, and we follow the 3 main types of activity to record all kinds of information of firm. The first activity, financing. The second activity, investing. The third one, operating. The accounting information system keeps track of the results of each of the business activities. So now we in turn go into each activity. The first one, financing activities. For financing activity, it related to borrowing and selling stock. Borrowing, you can borrow from bank, for example, and it creates liabilities. And actually, we have different types of borrowing here. Firstly, bank loans. Bank lend you money, and you borrow money from bank to invest your company for operation of the company. Debt securities, you issue bonds, a type of debt security to investor and to raise funds from that. Goods on credits or payables. So what is the meaning of goods on credit? Goods on credits. This account for example, I will give you an example, very simple example. Like you can open, for example, you have your own shop, like your own flower shop. You open your own flower shop, and then you can buy the flower from a garden. When you buy the flower from garden to sell to customer, so but you want to pay the money for the garden later. So you have to record. You have to record this transaction like goods on credit. That means you will pay the garden later for the flower you want to buy today. So we have goods on credit, and goods are your flowers. Then we have the payable account here when you record it. Payable means you have to pay the garden later for the good you buy today. Understand about the goods on credit? And the next one related to financing activities is the selling stock. And this activity, selling stock, when the firm needs money, they can issue stock. And when you invest in stock, you will become the owner of the firm. As you know before, I mentioned. Then it creates stockholder equity. So equity means, for example, your own shop, your flower shop, you invest all your money in that shop with $1,000. So your $1,000 is a stockholder equity. If you have some friend that share the ownership with you, and it might be up to $3,000 in total for the all cash you invest in the shop. So we have $3,000 in the stockholders' equity, the equity of yourself. The next activity related to investing activities is related to purchase of resources of which a company needs to operate. So resources owned by a business are called assets. So what is the meaning of assets? Back to our example about the flower shop. So if you have the flower shop, so if you own the shop, that means the shop house. So the shop house is your assets. You invest in computer to record all the transactions. So your computer is your assets. You might invest in, you might buy a scooter, a motorbike for delivery. So the scooter is your assets. And of course, flowers. Flower you buy from the garden also are your assets. And here I will give you some other example of assets of a firm. Land, buildings, vehicles, computers, furniture, and equipment. Try to remember what we have learned. The next activity, operating activities. When we record the operating activity, normally we follow all account related to revenues and expenses. So what are revenue? Revenues are the increases in assets resulting from the sales of a product or service. I will give you an example about revenue. For example, with the example about the flower shop, for example, today you buy to a customer with 10 flowers. Each flower with a price of $10, for example. So 10 flowers you can sell it with a total $100. So $100 is the revenue. $100 your revenue. The total money you can receive when you sell your products. However, how about the expenses? The expenses are the cost of assets consumed or services used in generating revenue. So for example, when you sell the 10 flowers and you can receive $100 for revenue, but you have to pay salary for like accountant or like delivery man, or the lighting fee, we call it utility expense. Then we have a number of different types of expense. So when you take revenue minus expense, we get net income or net loss. When revenue is higher than expense, you get net income. When revenue is less than expense, you get net loss. For example, in total, your expense we have mentioned it's account for $70, and the total revenue you get is $100. So you will get net income because $100 minus $70 is $30, a positive number. So we have net income. But when you count the expense, its total expense is $110, for example. So now total expense is larger than revenue, so you get net loss. For operating activity, it will begin once a business acquires assets or invests in assets or buys assets, and revenue are generated. Amounts earned from the sale of products and other resources will make the revenues. We have some different types of revenue here, depend on the type of each business. The first one, sales revenue, is normally used for service, for manufacturing companies or merchandising companies. For service revenues, it's normally used for service companies. And interest revenue for finance firms like bank. Then the next term we mention here, inventory. Inventory is an asset that consists of goods available for sale. So what is the meaning of inventory? Back to our example of flower shop. The inventory is the flowers you buy from garden. So we call inventory. And it's ready for sale. Or if you have a supermarket, all the products in the supermarket we call them inventory. So account receivable. Account receivable are the right to receive money later from a customer from sales. For example, when you sell flowers to a customer, for your customer, but they want to pay you later, so you will have account receivable. That means you have to receive later. They will pay you back later, and you will be recorded into accounting system with the account name of accounts receivable. The next term related to operating activity expenses. Incur to earn revenues is the cost of assets consumed or service used. Includes cost of goods sold, the cost, the money you buy flower from garden, cost of goods. Selling, cost for marketing, administrative, interest. When you borrow money, you have to pay interest. So we have interest expense. Income taxes expense. And the next term, liabilities. Liabilities arise from expenses. Includes account payable, interest payable, wages payable, sales taxes payable, income taxes payable. So you can see here, when you see payable, that means we understand it is the liabilities of firms. Payable mean, what does that mean? For example, when you buy the flowers from the garden, so you want to pay them later, so you have a payable, and we call account payable. For interest payable, when you borrow money, you have to pay interest, but not immediately. It might be after 1 month, so we record into the accounting system with the name interest payable. For wages payable, salary for employee, sales tax payable, and the same for income taxes payable. I will give some information about the operating activities: selling goods, providing services, manufacturing, cost of sales, cost of goods sold, advertising, paying employees, or paying utilities related to lighting fee or running water fee. I have the next example for you. So answer this question, please. Which is not one of the three primary business activities? Financing, operating, advertising, or investing? Which is not one of the three primary business activities? Give me your answer. I can follow you here. C. Very quick. Tension. Good. Very good. Very good. Huyền Linh, Nguyễn Thủy Tiên, Phạm Thị Khánh Linh. Good. Keep going. Keep going. Very good. Very good. Keep going. Very good. It seems that all you have correct answers again. Very good. Very good. So remember, we have only three main activities in firm mentioned here: financing, operating, and investing, not advertising. So the answer here is advertising. For advertising, is it one belong to one of them here? Operating? Check your answer. The next example. Classify each item as an asset or liability or common stock or revenue or expense. For the first one, cost of renting property. So when you open your flower shop, for example, if you have to pay the rent, so the renting fee here is assets or liabilities or common stock or revenue or expense. The same for other. Truck purchase. Pay car, you purchase. Notes payable. Payable, account payable. Everything from payable you have to pay later. So assets or liabilities or common stock or revenue or expense. One expense again. Xuân Nguyễn, very quick. Vân Du, very quick. Tension, good. First one, liability, good. Two assets, very good. First one, expense, good. We remember expense, not expense. Liability, good. How about issuance of ownership shares? Issuance, ownership share. Ownership share, when you invest in stock, you share the ownership with firm. So it's related to which account here? Tension, good. Very good. Very quick answer. 3. Amount earned from performing service. Xuân Nguyễn, give me the answer. Good. Let's check later. Very good. Trần Thị Trang, number 4, common stock. Very good. How about the last one? Amount owed to supplier. Owed to supplier. Good. Cloud Lockhart, give me the answer for 6. Xuân Nguyễn for 6. Good. Very good. Tâm Đặng, very good. Good. Okay. We have answer for all. Very good. Very good. Beatrice, could you please check the number 6? Hit asset? Old. Phương Huyền, could you check number 6 again? The meaning of this word is asset. Supplier, like the garden you buy flowers. As example with the flower shop. Good. Good, very good. Okay, now let's check the solution, the answer. The first one, cost of renting property. The fee you have to pay for renting property. Of course, expense. Truck, budget. Of course, asset. And I think all of you have the correct answer for 1 and 2. The third one, payable. With payable, it belongs to liabilities. Number 4, issuance of ownership shares. It belongs to common stock. When the firm want to have fund to invest to run the operation, so they might issue stock or they might issue bond. So the investor, when they invest in stock, they will become the share owner of the firm. So we have number 4 for common stock. Number 5, amount earned from performing service. So for service company, when we perform service, so we earn money. So the money we call revenue. The last one, amount owed to supplier. Like you buy flowers from the garden, and you pay later. So we have liabilities. Okay, now we have 15 minutes break. After the break, please give me the sticker, any sticker, or just say hello to your teacher. Let's make sure that you come back to the class. And now you have 15 minutes break. See you later.
Okay.
Hi class, are you ready to come back to our lesson today? So please give me any sticker, heart, or something like that. That I know that you are following me and you are here, and we can start again our lesson. Yes, please be back quickly. Very good. Hello, Phạm Khánh Linh. Hello, Trang.
Hello, Nguyễn Khánh Linh. Okay. You can call your friends as well. Hello, Ngân Vũ. Okay, so keep learning, keep
Going with the next objective, the last objective.
Okay, we ready?
The next objective, describe the four financial statements and how they are prepared. The most important part of this subject will focus on four financial statements that will be prepared by all firms, almost all firms in the world. We have four financial statements here. Normally, company prepare four financial statements from summarized accounting data. The first one, income statement, retained earnings statement, balance sheet, and statement of cash flows. And of course, the same in Vietnam. Almost all firms have the four financial statements like this one. And we now in turn go to learn each of the statements here. For income statement, the first statement you need to prepare is a report operating success or failure for a period of a firm, summarize revenues and expenses for periods. The periods here might be month, quarters, or year. That means the income statement inform you the information about the revenue and expenses. Revenue. How many types of revenues, how much money you get from sale of your goods, or all types of expenses in your firm. And remember, if revenue is higher than expense, we have net income. If revenue is less than expense, we have net loss. Here is an example of income statement. And for a statement, any statement, firstly, when you prepare the statement, you remember that we have the name of the company at first. And then the name of the financial statement. The first financial statement we have here is income statement. And then the period you want to report the financial information. Firstly, you represent the data related to revenues. Several corporations are service companies. So we have service revenue here. And for several corporations, the total service revenue for this period is $10,600. And then we have, you can see here the list of expenses from the firm. The first one, salaries expense. The second one, supplies expense. Supply expense, the fee for lighting, the fee for running water, or something like that. Rent expense, insurance expense, you know that. Interest expense, when you borrow money, you have to pay interest. So we have interest expense. Depreciation expense. What is the depreciation expense? I can give you an example when you with the flower shop again. When you buy the scooter, I mean the motorbike for delivery purpose, then today you buy it with to simplify, just assuming that it cost you $100 to buy the scooter. And after 1 year, how much if you want to sell it to someone else? You want to sell it, so the values of the scooter now it decreased.
So it might be $80 only, not $100. So $20 here is a depreciation of of the scooter. That means you have a depreciation expense for that asset. Or you can still keep it. We do not sell it to other, but you have to examine. You have to determine the depreciation expense for the asset you are holding, because the value is value enough decrease. So we have depreciation expense for that. Then you calculate the total expense here in this column. Total expense by sum all of the expenses here. Then you take the revenue minus total expense. You get a positive number. So we have net income. We have net income for Sarah Corporation. In this period, we have a net income of $2,860. So look at this again. Remember, when you prepare the income statement, firstly, you have to list the revenue, and then a number of different types of expenses. You list all expenses in firm. Then calculate the total expense, revenue minus expense. So you can have net income or net loss. The next statement you have to prepare. Remember that income statement. This is the first statement you always prepare before other statements. For the next statement, we call retained earnings statement. The same as before. Before preparing, you have to make sure that you have the name of the company at the beginning. The name of and then the name of the statement, the period you want to report it. And then we have a number of different items here. The first one, you need to inform retained earnings at the beginning of the period. Well, so retained earnings, what does that mean? For example, with the flower shop you are holding, just assuming that after the first month, the total revenue 1,000, the total expenses 500, for example. So you will have net income of $500. Then with $500, you now decided that one part from that you will use for future investment, and another part you can use this for yourself. That means you divide the income and then share it to other owner. And then the money you keep on hand, the income you hold for future investment, we call retained earnings. So for example, with $500 of net income, now you decide that you will keep about $300 for future investment of the firm. So $300 we call retained earning. And this one is a retained earning from the last period. For this company, it is zero. That means maybe it's the first period that they are operating, or last period they use all net income to pay for to share to the owner, to share to other owner as dividend. And then you add the net income for this period. Net income for this period, that means you use the amount of money from net income of income statement here. We have retained earnings, and then we add the net income, then you less the dividend. So dividend like $200 you pay to the shareholder of the firm. You have $500 for net income. You use $300 for future investment at retained earnings, and then you pay dividend to shareholder. You share the profit to shareholder with the amount $200 for your example before. For this one, we have dividend. It is $500, and then you get the retained earning at the end of this period. That means the beginning plus net income for this period, then less dividend, and then you get the retained earning for this period. So the total money we have now that ready for future investment here, $2,360. And then for retained earning statement, it shows amounts and causes of changes in retained earning during the period. Time period is the same as income statement. So normally it's reported like for month, for quarter, and for a year. And a user can evaluate dividend payment practice as well. Dividend. You will know about the dividend paid to shareholder. And then you know actually the retained earning now at the end of the period. And now move on to talk about the interrelationships of statements. Actually, we have the relationship between two statements. And in order to prepare the retained earnings statement, you have firstly prepare income statement, and then you use the amount here for net income and use this for net income in retained earnings statement to calculate the retained earning at the end of the period. So income statement is prepared first, and then retained earnings statement. Next, the next financial statement we call balance sheet. For balance sheet, it reports assets and claim to assets. Also claim of creditor as liabilities, claim of owner, stockholder, equity. That means in balance sheets, you will have information related to, firstly, assets of your firm, all assets, land, building, computer, furniture, feature, and so on. Claim of creditor, liability, but you have the payable, the words of payable you know before, all related to liabilities. Claim of the owner, the money, your money, you for the firm, like you invest in stock and become the owner of the firm, so we have the stockholders' equity. And then I give you the basic equation, accounting equation. We call this one the basic accounting equation. Assets equal liabilities plus stockholders' equity. And it's normally reported 1 point in time, like a year. Normally it's prepared for a year, the whole year. It might be financial years or calendar year for the firm. This is an example of a balance sheet for several corporations and the same period, 2020. This might following the financial year, not calendar year. Might be starting from September 2021 to 31st of October 2022. Here, firstly, you need to report assets. For assets, the firm have cash, the asset of firm, all cash you have for the flower show in your assets. Account receivable, you have to collect from your customer who want to pay later. So we have account receivable in your assets as well. Because you sell it already to the customer and they just pay you later and you collect later. But now it's in your assets. Supplies, like office supplies, pen, paper, something like that. Prepaid rent, that means the renting fee, but you pay it before the period, like for the whole year, but you pay at the beginning of the year. Then we have prepaid rent. You pay for the whole year, but you paid it already at the beginning of the year. Then we will record it in balance sheet as prepaid rent. For equipment, net. So what does that mean with net? Equipment net means the equipment now minus depreciation expense. Remember that today we can buy it worth $1,000, but after 1 year, after 2 years, or 3 years, its value will be decreased. And then you have to record the real value, not the initial values when you bought it at the beginning. So equipment net means the total money for equipment minus the depreciation expense. You will learn about later about this in more detail. And then you have the total assets of this firm here, 1,910 of all assets here. Then the next part, we have liabilities and stockholders' equity. The first one, you reported liabilities. Liabilities, we have firstly notes payable. Notes payable means you can have amount of money you borrow from bank. Then they might issue you a note payable. So your money you borrow from bank, you have to pay them later. So we have notes payable. With note payable, it might be that meaning that you might borrow money from bank for short term, not long term, normally. But actually we have another type. We will learn it in more detail later on. For account payable means you buy, for example, back to our example, flowers. You buy flower from the garden, but you want to pay later. So when you want to pay later, but you bought it already, so you have to record it in the balance sheet as accounts payable. You bought it, you record it, but you have not paid it yet. For the next one, unearned service revenue. Unearned service revenue might be, you can see the football ticket. You buy it before the football match it begins. So when they record it into the balance sheet, so they record it as unearned service revenue because the service is not have been performed. And then next one, salaries and wages payable. Salary and wages we have to pay for employee because the employee now are working for you, but you will pay them at the end of the month. So you have to record it as payable. Interest payable. The money, the interest you have to pay for money you borrow from investor or bank. And then we have total liability. Total liability, we have $9,550. For stockholders' equity, we have the money from common stock. When the firm needs money, they can issue stock and get money from investor, and investor now become the owner of the firm. So we call this one equity. This is not a kind of debt. It's not borrowing. You become the owner. So the money becomes the equity at common stock. And then the retained earnings, the net income you get from operation, and now you keep it as future for future investment. So we have all together from common stock, and retained earnings is stockholder equity. And then now, remember about the equation, the basic accounting equation. Total asset equal total liability and total stockholder equity. So now, back to this slide. I will explain about this. Why total asset equal total liability plus the stockholder equity. Back to our example, basic, very simple example of flower shop. When you want to open the flower shop, for example, you need to simplify. I just assume with a very small amount of money, like $1,000. The total money you need to invest in the flower shop, or you want to open the flower shop, it's $1,000. But now you just have like $600, so you need more $300 to invest in the flower shop. That's makes $1,000. Then $700 we call the stockholder equity. Then liability, you might borrow money from bank, so you have a note payable with $300. So we have liability. So all of the fund will make the asset. Make the asset, you will invest in which? The shop house, the scooter, the computer, flowers, or also cash. So this is the meaning why total assets will always equal total liabilities and stockholder equities. Remember that. Okay, understand about the balance sheet and each account from here. Each item from here we call account. Account of cash or cash account. Accounts receivable, supplies account, prepaid rent account, and so on. And then here, the interrelationship between balance sheet and retained earnings statement. We have retained earnings statement from retained earnings statement. We have retained earning here from retained earnings statement we prepared before. And then you bring this amount of money and report it into here as a retained earning for this period. Remember, many students have a mistake at this point. Why? Because they use the retained earning at the beginning. Remember here, the period we are reporting is 31st of October 2022. So this one is the retained earning at the beginning. It's not the end. So when you report it into balance sheet, you have to use the retained earning at the end of the period. The last statement we mentioned is statement of cash flows. It provides information about cash receipt and cash payment. Cash flow, cash, all related to cash. You pay salary today by cash. You buy some equipment by cash. So you have to record it in your statement of cash flow, all related to cash. And it's summarized for periods like month, quarter, or year. Cash effects of operating, investing, and financing activity. Operating, I have said, like paying salary, like buy the new something like new goods, new equipment for investing. Financing activity, you get the money from bank, or you get the money from investor like issuing bond or issuing stock. For statement of cash flow, it will provide the answers to some questions as follows. The first one, where did the cash come from? The second one, how much cash used during the period? And the last one, what was the change in the cash balance during the period? And of course, a company cannot survive without cash, survive without cash. Here is an example of statement of cash flows. And remember the name of cash flow, the name of the firm, the name of the statement, and then the period you want to report. When you report the statement of cash flow, normally you give the cash flow from operating activity first. That means you will use the three main activities you learned before to report the financial cash flow. Firstly, the activity related to operating. For the operating activity, normally, it related to revenue and expenses. You will report the card receipts and cash payment. And then for investing activities, you also report the information related to receipt and payment. Here is just the purchase of equipment for investing. And then the last one, cash flow from financing activity, also the outflow and inflow of the cash via the issuance of common stock. So you get the money, you have inflow money from issuing stock. Issuance of note payable. You also have money from bank. You borrow money from bank. And payment of dividend. You pay dividend for stockholder. Then, when you take the card receipts, or the cash inflow minus the cash outflow, the cash payment, and the same for other, you get the net cash. And then net cash of each activity from operating, for investing, for financing, and then finally, you get the cash at the beginning of the period. Cash inflow minus cash outflow for every activity. For example, today you receive $1,000 from the suppliers, from your customer, and then this is we call in cash. So we call this is the inflow of cash. And then you pay salary $500 in cash. So we have expense or outflow. Then we take the inflow minus outflow. We have the net. And all together we have net, cash flow, or cash at the end of the period. But remember, in order to have the cash at the end of the period, you also have to add this one, cash at the beginning of the period. Of course, you will have the cash at the beginning of the period. All companies always keep a certain amount of cash for every day to make sure that they are safe and always have cash already for any event. So you have to add the cash at the beginning. For this firm, they have zero cash at the beginning of the period. Maybe they don't have cash the last month, or this is the first month of operation of this company, so they don't have any cash at the beginning. So we have cash at the end of the period, and this cash will have the relationship with balance sheet. Here, you see, when you have cash from statement of cash flow, the cash here will be reported into balance sheet as cash at the beginning, and normally cash will be reported at first. Do you see that? Cash from statement of cash flow will be reported in balance sheet as cash. So now try to remember assets. Assets includes cash, account receivable, all related to receivable. That means you have to collect from customer. It records as assets. We know that it's our asset because we sell to a customer and they have to pay you money, for example. So you got it, but just collect it later on. Inventory. As I said before, inventory like for flower soap. Flowers are your inventories. Always supermarkets or product they are selling, we call inventories. We have assets like furniture and features. We have equipment. We have supplies. All of them are assets. For liabilities, we have a number of types of liability here. For note payable, as I mentioned before, note payable, you might borrow money from bank and we call it note payable. We have account payable. We have interest payable. We have salary payable, or account related to payable as liabilities. And then we have the last one, unearned revenue. Unearned revenue, as I said before, that the service have not provided to a customer, like football tickets. When you buy the football ticket, the company who sell the ticket will record it as unearned revenue because the football match had not been performed. Then now we have stockholder equity. The last part in the balance sheet, we have the ownership claim on assets. We have common stock, and normally it also got paid in capital. When they issue stock to finance fund. And also we have retained earning. And I explained retained earning, the income you keep for future investment will be the equity of the firm. Then remember the basic accounting equation: assets equal liabilities plus the stockholder equity. Let's do it. We have practiced. We have this one, and could you do that? For financial statement with the first question, net income will result during a time period when asset excess liabilities, or B, assets excess revenues, or expenses excess revenues, or D, revenue excess expenses. So now think about it and then give me your answer. D, yeah, Thanh Trần, Nguyễn Trần, Thanh Trâm, Huyền Linh, very quick response with D. Later check later about your answers. Hope that's all of you will have the correct answer. Yeah, I see that. I'll pick up the D. Good, very good. They are all true D for your answer. Very good. Very good. Good job. Okay, very good. Hope you give me the answer D. Very good. So now let's check your answer. Okay, D, revenue excess expenses. So you will get net income. And in contrast, when revenue is less than expenses, so you will get net loss. Remember that. Okay, now do is number 6. Which of the following is not a correct representation of the accounting equation, the basic accounting equation? First one, assets equal liabilities plus stockholder equity, or assets minus liabilities equals stockholders equity. C, assets plus stockholders equity equal liability. And the last one, assets minus stockholders equity equal liabilities. So which of the following is not, remember, is not a correct accounting equation? C, Nguyễn A, are you sure? C, A. We have a different answer now. I see. Someone choose C, someone choose A. To remember this equation is very easy, not too difficult. Okay, let's answer and we will talk about it later. To remember this equation and make sure that you will keep in mind, remember it immediately after learning. C. Many people, many students give me C now. Remember, not the correct accounting equation. Okay, very good. Keep going. Very good. Keep going. Okay. Now let's check our answers. Then you can see that here. The correct answer is C. So many people, most of the students have the correct answer already. Assets plus stockholder equity equal liability. No. Why? All your assets come from your equity and come from the liability, the money you borrow. So remember, assets equal liability plus stockholder equity. Remember all your assets. Remember or think back about the example of flour soap. You need $1,000 to run the business. So all the assets in your business is $1,000 with $700 from equity and $300 from borrowing from bank liability. So remember that assets equal liability plus stockholder equity. Now the next question. Using the accounting equation, answer the following question. Here I have the data. If liabilities equal $10,000 and stockholders' equity equal $20,000, so could you very quick calculate assets? Very quick, Xuân Nguyễn, Thanh Trần, yeah. Quyền Linh, the same answer as An Bùi, the same answer as well. Okay, next one. Tâm Đặng, Hoàng Thu Hiền, Ngọc Minh Vũ. Not $30,000. Remember that we are learning in English, so answer in English, not in Vietnamese. Good, $30,000. Very good. Good. Keep going. Okay, very good. Now, let's check our answers. We base on the basic accounting equation. Total asset equal total liability plus the stockholder equity. So we have liability here, we have stockholder equity here. So then we can very quick to calculate the assets with $30,000. And I see here all you have the correct answers. Very good. See that? So we have $30,000. Next. If we have assets equal $75,000, and liabilities with $35,000. So then, could you calculate stockholders' equity? We still also based on the basic accounting equation to calculate that. Now move on to this one. To yourself. Anh Bùi, give me the first answer. Nguyễn, very quick response. And let's check later about $40,000 you have just given me. $40,000, very good. Keep going. Tâm Đặng, Ngân Vũ, Cloud Lockhart. Biết tốt. Keep going. 40K, what does that mean? Remember that the sign of dollar, you always before the number you want to represent. It's not at the end. Good? Good job. Keep going. Okay, so now let's check about the answer, and then you can see your answer is correct or incorrect. Still based on the basic equation about counting, so you can find the stockholder equity with the amount of $40,000 by getting this formula. Not too difficult. So now you can remember the basic accounting equation. Try to keep it in mind immediately. Okay, Phạm Khánh Linh. Sorry, I will say your name later when you respond later on. Okay. Now, next question. Which of the following financial statement is prepared at a specific point in time, one time only? Balance sheet or income statement, or retained earnings statement, or statement of cash flows? Which one? Just specific point in time, not month, not quarter or year, just a specific point in time. Which one? A, very good. Huyền Nguyễn, Hoàng Thu Huyền, Phạm Khánh Linh. C. Phạm Khánh Linh, could you think it again and answer again to get point? I give you another chance to answer again, not C. A. It seems that many students now pick up the answer A, and let's check about this. Ngọc Minh Vũ, C. Nguyễn Văn A, Tâm Đặng A, Ngô Thu Anh C, Cloud Lockhart A, Ngọc Minh Vũ C, Thanh Phương Độ A, Huyền Linh A. Okay. Now check it. Check your answers. We have balance sheet. And remember, for balance sheet, it normally prepare at a specific point in time. For income statement, retained earnings statement, and statement of cash flows, it is normally prepared for month, for quarter, for year. And now we have a big problem to do. The big sample here. So we have this one related to financial statement. We have a number of many different type of data here. And my question is, or my requirement for you here is to prepare income statement, retained earnings statement, and balance sheet yourself. in order to prepare each financial statement here, so firstly, you have to identify which account belongs to which statement. This account, it belongs which statement, for example. And remember, in order to do that, you have to write down the name of the firm first, the name of the statement secondly, and then the period you want to report. The period you want to report the information. And then you can in turn to report each account. So firstly, income statement. Actually, you have to write down on the paper, and then you can take the photo and send me later when we finish the class today. But now, in order to prepare each statement here, so we will work together. We will work together and identify this one, and this one belong to which statement. So firstly, for income statement, so could you tell me which account here belongs to income statement? And remember, for income statement, it informs you about the information of revenue and expenses. So now, could you see which one is revenue, which one is expense? And then, comment here for me. Income statement first. Could you list all accounts belong to income statement? What accounts are on income statements? The question is, what accounts are on income statement? Now, let me back to this slide. So, could you identify each account? Remember here, each item here we call it account. So now, identify the account here, which one belongs to income statement. Do it. Not prepare, not answer the number. I mean, could you recognize, identify which account belongs to income statement to prepare the income statement? You have to prepare the income statement. You have to prepare retained earnings statement. You have to prepare balance sheet. So, firstly, the first question, what accounts are on income statement? What accounts are on income statement? Okay, service revenue, equipment. Nguyễn Trần Thanh Trâm give me the answer of equipment for income statement. Remember that for income statement, we just have revenue and expense. Then take revenue minus expenses. All expenses, we get the net income or net loss. So equipment is not equipment. Equipment is your account asset. And because it's asset, so it is on balance sheet, not income statement. Service revenue, good. Rent expenses, good. Pension revenue and expense, good. Keep going, Zioyato. Rent expenses, very good. Cloud lockers, not equipment, as I explained. Equipment is a kind of asset. It's on the balance sheet. It's not in income statement. For income statement, just the revenue and expense. Insurance expense, good. Rent expense, service revenue, good. Expense, supply expense, good. Rent expenses, good. Keep going. Not equipment. When you buy equipment, it becomes your asset, not expense. It will become of your assets. Like you buy a computer will become your assets. It's not a kind of expense. So equipment is not a kind of expenses. Remember that. Rent, equipment, not equipment. Insurance, supply, revenue, good. Rent expense, good. Keep going. Supply expense. Keep going. Okay. So now I will give you the answers for the question. What accounts are on income statement? Here we have. You see, it's in a red color, so might be difficult to see. Next lecture, I will change the color of this one. Sorry about that. For rent expense, it's account expense. It belongs to income statement. We have insurance expense, another kind of expense. Service revenue. The first one we need to prepare for income statement. Supplies expense. It seems that all you have recognized the item belong to the accounts belong to income statement. Remember that for equipment here. When you invest in equipment, when you use your money to buy equipment, it becomes your assets. It's not a kind of expense. Remember that. Actually, we will learn it in more detail in next slide. But at first, remember that. Now, the next question. What accounts are on retained earnings statement? So in order to prepare the retained earnings statement, you need the retained earnings statement. You need the retained earnings at the beginning. So, the beginning. Is there any retained earnings at the beginning? No. So, we can write down it's blank or 0 for the beginning. And then, the next item for retained earnings statement, net income. So, where you can get the net income? Of course, from income statement you have just prepared before. And then you add the dividend. So, you have to know dividend here we have. So, answer me. Which account here you will report into retained earnings statement? Good. Retained earning and dividend. Actually, we don't have retained earning here, right? So we have to calculate this based on the retained earning statement now. But we have dividend already. So we have, yes, good, dividend. Dividend, net income. I just asked about the account from here. Of course, retained earning, net income, we need to report it into retained earning statement. But I mean, from these tables, could you identify which accounts will be used for retained earning statement? Good, dividend, Hương Huyền, Hoàng Thu Hiền, good, Mutat, and a lot of students answered it before. Very good. Remember that net income, we need to calculate this from income statement. Now let's check. We have dividend. Let's check now. We have dividend from this table. So dividend will be used for retained earnings statement. And next, what accounts are on balance sheet? What accounts are on balance sheet? Back to this slide. Could you identify which accounts belong to the balance sheet? Which account belong to balance sheet? From balance sheet, we have assets, we have liabilities, and we have stockholder equity. So could you identify that? Now, could you identify which account belong to balance sheet? Account receivable. Which account belong to balance sheets. And now, remember that in balance sheets, we have assets, we have liabilities, and we have retained earnings. Yes, equipment, good. Equipment, payable, common stock, good. Retained earnings, dividend, and retained earning here is a retained earning yield calculated from retained earnings statement. Account receivable, payable, common stock. Keep going. Dividends. Dividend we just used before for retained earning statement, not in balance sheet. Thanh Phương Đỗ. Not dividend in here. Dividend you reported it already in retained earning statement. Good. Keep going. Cash, very good. Cash is your assets. Phương Huyền, give me the answer for cash. Advertising supplies. Advertising supply. Good. Equipment, common stock. Keep going. Cash, good. Keep going. Prepaid insurance. Payable. Yeah, some type of prepaid. But who tell me about the prepaid insurance here? Quyên Nguyễn. Where the prepaid insurance? I just want to ask you about the account here. It's not prepaid insurance. Here the insurance expense. It's not prepaid insurance. Very good. Very good. So you will in turn identify each account here. We have assets. So which account belongs to asset? Which account? Receivable. All type is receivable. And then anything from assets? Equipment. Anything else? Supplies. Cash is to belong to assets. And now we move on to liability in balance sheet. Liability. Payable. Payable. Anything else? No. Then for equity we have common stock and we have retained earning from the retained earning statement before. So here, all the account you need to prepare the balance sheet. And now, your task here is to do this one. Please prepare an income statement, a retained earnings statement, and balance sheet yourself. And you have 30 minutes to do. After this, please take a photo and send it to me later. Send it to me when you finish the class. But before that, when you get the answer for retained earning, so could you give me the answer for retained earning? So now you have 30 minutes to do this one. We will be back in 30 minutes. When you finish this, remember to take a photo. Okay, I'm so proud of you. A lot of students have correct answer very quick, and I got this in my inbox now. So, okay, so I will give you now the answer, and you can check it at home. And now we can finish our class today. Okay, wait for me. Here is the income statement, and remember, the name of the company first, the name of the statement, and then the period. Need to report the information, and then you get all accounts here. And the net income for this period is $6,800. The next one for retained earnings statement. After preparing, so we get the retained earnings for this period is $6,200. Then for last one, balance sheet. Firstly, you report assets, and in assets we have a number of different accounts here. Then the liabilities, then stockholder equity, and then you see the total asset equals the total liability and stockholder equity. And I got all correct answers, so I'm so happy, so proud of you. So then we can finish our class today, and remember we have tutorial class tomorrow's afternoon. I will send you the exact time later on. So thank you so much for the participation in our class today, and thank you for your support as well. Thank you and goodbye. See you next week.